Hi, I'm Jay Butch with CertainTeed Roofing. I'm the Director of Contractor Programs. And I visit with thousands of contractors every year. And sad but true, most are not making 10% net profit. We have a resource, a book called Making and Managing Money. The book was actually written by Linda Case of Remodeler's Advantage. I encourage you to get your hands on that book. Ask your territory manager for a copy of it. It's a great read. You don't have to be a CPA to understand it, and it covers important financial information that you need to know as a business owner. Nowadays, job costing is critical to your success. In the old days, you could pretty much ballpark it a third, a third, a third. You know, a third for materials, a third for labor, a third for profit and overhead. That equation has changed. You really need to cost every single job and then go back and see if you ate the bear or the bear ate you. Materials have gone up, as we know. And you have to be careful with materials. Sometimes those odds and ends will kill you. If you are always running out of drip edge on the job site, you have to send me to the store to go get more drip edge. By the time I get back, that's $200 drip edge. So that can add up over the course of a year. You need to mark up your labor. I mean, if you're paying a guy 20 bucks an hour, you need to bill him out at least 40 bucks an hour. Think about the people that you work for. They have insurance, they have health benefits. You and your folks deserve the same. And if you're running subs, you should mark them up at least 20 to 25%. Subs need to make a living. They need to have health benefits, insurance. They have families to raise. So if you ride them hard and put them away wet, they'll go work for someone else. We all know it's hard to get good labor. So you can't pay them $1 million an hour, but they have to have an attractive wage. One of the benefits of having that job costing information is that you can look back at your history and determine where you're making your most money. Where's your sweet spot? Maybe you think you're making a killing on the 12-12 chopped up roof. Maybe you're not. Maybe on those small up and over gable roofs where there's plenty of competition, maybe there's not enough margin. But this way you can pick and choose and set your sales strategy accordingly. It also reveals which salesperson is selling at the highest margin, which foreman, which crew is producing the best. So look at those numbers for insights into your business. When determining your pricing, a lot of companies will use per square pricing. And I don't care whether you're getting 400 a square or 4 million a square. What I care about is what's left over as net profit. So what is the right price? You need to decide as an owner what your pricing strategy is going to be. Are you the high price company, middle price, or low price? But looking at your financials, that should help you determine the prices that you need to remain profitable. So what's the price of quality? We all pride ourselves on quality workmanship, but if price compromises quality, it's the wrong price. What's the price of customer service? One callback can erase a lot of profit. So take a look at your price versus your volume. It's very easy to fall into the volume trap. However, if you cut your price 10%, you need to do 25% more in volume to make the same profit. Conversely, if you raise your price a mere 5%, you can do 17% less volume. So for example, instead of pricing the job at $10,000, you price it at $10,500. If I'm going to hire you for 10 grand, chances are pretty good that I'll hire you for 10.5. Less jobs, less headaches, less risk, less liability. Volume is not always the answer, so you need to price it right. Knowing your overhead, that tends to be the black hole. Companies either have it down to the penny or they just take a wild stab in the dark and hope they cover the overhead. Now there's a simple formula that you can use to take a look at your overhead. You take your overhead, divide it by gross sales, and that will give you a rough percentage to load onto your job. But overhead really isn't a function of sales, it's a function of time. A 4-day job is going to have more overhead than a 2-day job. And one of the things you should do is also add a small percentage for profit. The object is not to recoup your money. If you spend $50,000 on a truck, you don't want to just recoup that 50. You could have taken that 50,000 bucks, put it in the bank, and earned at least a small percentage of interest. So it's the time value of money. And one of the things I like to cover is the difference between a multiplier and markup. Normally people speak in terms of markup but there's a big difference between markup and multiplier. For your company to hit a 40% gross profit margin, you need to multiply your direct costs, your labor, your materials, by 1.667, not 1.4. A 40% markup will get you a 29% gross. So if you want to hit 40%, you need to mark it up 67%. Here's the formula for the multiplier. You take 1 divided by 1 minus the gross profit target that you want, and that will spit out your multiplier. So if your objective is to have a 30% gross profit margin, your multiplier would be 1.429. And I recommend that you shoot for at least a 30% gross. North of 30 is good, but under 30, it gets a little tight. A couple bumps in the road, and you can get sideways in a hurry. One of the most important financial numbers you should track is your break-even point. The formula is very simple. You take your overhead expenses, divide it by your target gross profit percentage. That tells you what you need to keep the doors open, just to break even. Once you achieve your break-even point, everything you sell thereafter, you back out your direct costs, material, labor, and that gives you your net profit. So in conclusion, I urge you to get your hands on the Making and Managing Money book. You deserve a profit. That's what all businesses are for. It's a risk and reward relationship. The riskier the occupation, the greater the reward, just like the stock market. You as an owner deserve 10% of the gross sales as compensation. Then you have to pay your salespeople, and what a lot of companies forget is to pay the company itself retained earnings. The company as an entity needs to make profit. Be safe, be different, and be profitable.